Good afternoon, everyone. This is Harmeet from Sigma Picks. Thank you for tuning in. We're going to be going over our SPY QQQ and IWM ETFs and their accounts that we kind of follow, mostly because they encompass most of the market. So let's get going. A few things we want to know that what we were talking about last week was the fact that we could be seeing some sort of an ending coming to this larger distribution that has been going on for most of the year. The things that we had pointed out obviously was that we want to see is, we want to see higher lows and price action taking out highs, and we're starting to see some of that early evidence building that we are getting a little bit of bullishness returning to the markets. The one thing that you also should be aware, so let's just look at a few things and then we'll move on. First of all, this 362 level, okay, and then this 374 368 zone. Okay, so let's just say what's look at the 362 first. Just so you know that this point could be the end of the fifth wave, and this is starting of something larger that's going to go out and start moving us towards higher, towards this confirmation that we are in the fifth wave. So the things that I would want to see, okay, obviously the first thing was that, is this wave attenuated? Yes, it is. Is this within attenuation zone? Yes, it is. That just says there is more bullishness right now in the market than there is bearishness. Did it make a higher low? Yes, it did. Did it take out the last high? Yes, we are trading above it. So where are the confirmation that we can say, we are starting to get more bullish than bearish? The next number we really want to see take out is this 417.37. These, the 405 and the 408.57, are your minor pivots, okay? And 417 is the end of the fourth wave. If we started moving and start take out the fourth wave level and start moving up, that adds more to the credence, the fact that we are starting to see this rounded bottom formation form that tells us that we are going to break out to the upside. Okay, so there is a lot that's building on. Obviously, once we get to this 417 level, okay, once we get to this 417 level, we can start looking at some of these other larger pivots, okay, where the last major waves of this structure started to end. Okay, so 429, 453 is a minor one, 444 is a minor one, and of course this 451 and 488 zone, and that's your excuse me, that's your another major pivot that we would be watching going if we start moving above. The step one is obviously, we have to get to this 417 level. So you have this in sort like a frying pan structure, where you have this rounded bottom and the price action does this, moves up, moves down, and then starts to move away. Okay, this is your normal double bottom or a W pattern, and it needs to take out this middle high in order to say, yeah, it's going to break out. Then you can follow through, have your J hook and so forth. So those are your stereotypical rounded bottom structure that you will see that form that tells us that bullishness is returning to the market. Of course, the biggest thing you want to see is it go above this 200-day moving average. Okay, so that just becomes even that much more important, and that gives it more weight, the fact that we are out of this bear market. Okay, and a lot of the money managers do look at this very much so, and I do follow it also. It's not on the chart because we're concentrating on Elliot Wave alone, but that's something that is also build more on evidence, the fact that we are getting out of this bottoming structure and moving and making some sort of constructive strides towards getting to get going in this fifth wave. And right now I do feel like we're in the first wave, okay, If this is truly the end, then we are in the first wave. 511 is right now. We should some sort of pull back to some sort of thing, some sort of sport, and then catapulting a third wave where I want to see lots of participation with volume coming in. And if that starts occurring, the game is on for the bull. Okay, so let's go to the next one. This is our QQQs. Same difference. Okay, we can make a case that there is. The point is that we are. This could be end of the fifth wave. It is within the attenuation zone. So either way, whichever we want to call it, the point that we want to see taken out again, the middle right here. Okay, if it does this, this is. Oops, sorry. Let's just quickly redraw this part just so you guys see what I was talking about in the last one. This, 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 okay, and this. This is your stereotypical W pattern that you will see in a rounded bottom breakout, and breaking out between the middle high within this frying pan, the middle high, which is 314.56, that gets us to the primary confirmation of 377, that this may be something that we want to keep an eye on. Okay, this is your stereotypical round bottom that's coming up. Again, we want to see it. We go through some major simple moving averages. You can look that up, and 50 and 200 obviously, but 50, definitely 50 to 200 that you want to follow. So the things again that we want to watch, again, the case is there's a strong case that we are seeing some sort of ending coming. Okay, we do want to see it get above 314 and then complete this whole rounded bottom by taking out the last major correction of this downtrend. Okay, once it's above this B point, there is a great possibility of saying that it's gonna go ahead and go on to make all-time high again. Okay, it's not set in stone, but know your evidence, know your zones, know your pivots. Okay, and know and understand how this structure is formed. Okay, and understand also that you're gonna see some sort of J hook formation at the very end that's going to be popping in over here. So let's just get through this 314 zone, see where we stand within a week. I think that would be a great way for the bulls to start coming in and start kind of putting in more money. The Brethren has been great, so there's lots of evidence out there that if not a major correction, we may be going to start a major cycle moving forward in Qs. Okay, so let's go to our next chart, IWM. It's again the same story here. The zone that we really, really want to see it get taken out is the middle part, okay, which was part of the last major correction of the downtrend, which is 190.94. This will give us the stereotypical, okay, W breakout, okay. It is also part of a larger rounded bottom. This is how bottoms are formed. It needs to take out the middle part of this frying pan and then start looking at some of these larger pivots. Let's just quickly move this out. So for IWM, I think I do expect, if it does get through this 190, to try to get back into this 190, stay in this 190 209 zone, where we had this major diverse consolidation that came in, and then see some bullishness come in if it was to be the case. The numbers to watch, again, a major one is 227.413, because that's where the last corrective wave that ended, larger wave of the downtrend, okay? And we also want to see the last corrective wave taken out of the downtrend taken out in this W formation. Okay, those are the things that you should be, when it comes to price action. There again, that gives you more credence to the fact that we are coming to end of the second wave. Okay, and by having these taken out, we should expect it to be in the third wave. We'll follow this. I think it's a good time to start looking at how bottoms are formed for people to kind of understand that process, looking at what the characteristics of the first wave of are, because it tends to be the hardest wave to decipher, because it has not confirmed that the fact that it is starting of the first wave until you have gotten way into, starting to go into third wave. And that's why the people say the third wave is the money wave, because that's when the major participants in the markets, most of the people jump in and be like, hey, I see something's happening. It's confirmed to me that it's in an uptrend. Maybe a 34 EMA or 21 EMA or whatever the people follow. The price action is following above an EMA. The EMA is sloping up. You're having moving averages crossovers. It's taking out the recent highs. Okay, so, and it's starting to make higher lows. So all those things come in play, and the fact that count and Fibonacci's, everything kind of moves in unison to tell you that yes, it's, we can go ahead and be bullish. And I'm still, the only thing that does worry me is the fact that we're not seeing volume and volatility. Those are some of the other major characteristics of the first wave that we should see this violent move up, where a lot of people are jumping in, a lot of funds are jumping, the smart money's jumping in. They're going to lead the way. The only evidence that we have right now was this move right here. Okay, this kicker move that came in, where we came down and had this major drop. Okay, I got short, and I'll tell you, and I got stopped out the very next day, just because as soon as this kicker started forming, I was like, okay, that this trade is already broken. I'm going to stop myself out. This was a high probability trade, did not pan out. I was expecting it to go back down to 162, did not pan out, because there is something happening that is, telling us that reverse is true. So we got out this kicker. We're going to keep watch on it. Watch this 182 level. Of course, the big one right now is 190, and then the next big one 212, and then 227. Those numbers you should always just kind of have it in your book and say, okay, those were the last highs that we know that the market needs to take out in order for it to continue moving higher. Okay, thank you so much for watching. I really hope you are getting something out of it, and have a great day. Bye-bye.